our instruction from the investors in Switzerland is, please invest our money purely into office. In the last 6 months, you can see that the demand is back. People are coming back into the office. Tenants are knocking at the door. We had a tremendous, let's say, success in the last 3 months by filling up our buildings. And what I see is, if you have the money, if you are liquid, jump into the right spot and buy some office space. That's the future.
We pivoted a little bit in terms of where we're investing in the US. So instead of investing through discretionary funds, we've actually been doing more targeted opportunistic investments. So creating structures to find the best deals in today's climate, which is, around distressed office, multifamily, and select opportunities in like data centers and industrial. So the West Coast, I think, is where we really like. So Southern California, Bay Area, the Pacific Northwest, and it's non-commodity office. So it's unique office that we think will lease well in the right submarket. So really, it's more of almost a stock picker mentality today. Not every office building is going to do well. You do not want to buy commodity office buildings, even if it's at a low basis.
Even with Trump, let's say, shrinking a little bit the ESG requirements, I think you have to deliver modern office space. And I mean, to get the tenants back into the office, it has to be more than just office, table, desks, and chairs.
If you take 50, 60% leverage today on a new acquisition, on a distressed office deal, you basically have a gun held to your head. And so if you don't execute your business plan in time, you're in a lot of trouble. Our view is you have a much longer runway if you own this unlevered. You can execute your business plan, then put debt on it, take out all your equity, still own the building.
Amenities, very important. For example, end-of-trip facilities like you have, let's say, in Australia. You come with your bike, you have showers, you have your own gym in your office building, you have hangout areas, lounges, meeting rooms, bookable meeting rooms, and things like that. It's very important these days to make it more attractive for the tenants, for the people, let's say, coming back into the office.
I think that office today and how bad it is in the sentiment today in most of the big markets. We're here in DC. If you look at San Francisco, LA, Seattle, these markets, I do not believe they're going to be this bad in 12 to 24 months. I think right now we are seeing unique opportunities where you have not seen in the past. It's sort of an opportunity of a lifetime is what we believe. We think that that window is probably going to close and shrink over time. There's more and more groups, even in this audience, that are starting to look at distressed office. But I would say it's actually been, it's basically off limits for a lot of groups today. And so I think that to us, that's actually intriguing because it's very contrarian. And I think it's creating some interesting opportunities.